everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel has declined. Specifically, the domestic spot price of hot-rolled coils dropped by 30 yuan per ton, and the price of rebar fell by 10 yuan per ton this week. From a macro perspective, the number of initial jobless claims in the United States last week stood at 218,000. compared with the expected 235,000. The improvement in this data has strengthened the US dollar, and expectations for a 75 basis point interest rate cut by the Federal Reserve within the year have been revised, which has alleviated the sentiment in the commodity market. On the EU side, there are recent plans to impose a 20 to 50% tariff on Chinese steel products, which has undermined confidence in the export sector. Domestically, expectations for curbing involution, excessive internal competition, and industrial production restrictions have been repeatedly mentioned throughout the year. Coupled with the weak macroeconomic data on the real estate and consumer sectors, market expectations for policies in the fourth quarter are relatively positive, providing support for the forward steel prices. On the industrial front, the weekly output of the 5 major steel products, rebar, hot-rolled coils, cold-rolled coils, medium and heavy plates, wire rod, increased by 94,700 tons. This week, molten iron output remained above 2.4 million tons per day, with the increased output mainly directed to wire rod. The output of hot-rolled coils decreased by 23,000 tons week on week, while production of the other 4 major steel products resumed to some extent. As the off-season gradually comes to an end and steel profit margins are maintained, steel output is expected to increase further in the subsequent period. On the demand side, the weekly demand rose by 277,300 tons this week. However, from the perspective of traders, the demand growth may be driven by the increase in the apparent demand caused by the higher output of cold-rolled coils and medium and heavy plates. In particular, this week's demand was also boosted by pre-holiday stockpiling. Nevertheless, the recovery in finished steel demand remains weaker compared with the same period last year. In terms of inventory, the inventory of the 5 major steel products shifted to a destocking trend this week, with an overall inventory reduction of 91,300 tons week on week. This week, steel mills' in-plant inventory turned to accumulation, while social inventory decreased instead. This phenomenon reflects that traders are being cautious in purchasing and gradually reducing their stock levels. In summary, over the past 2 weeks, despite the pre-National Day stockpiling demand, the performance of steel demand has been lower than expected. Regions such as South China may have been affected by typhoons to a certain extent, so the observation of real demand will need to wait until after the National Day holiday. Although the steel market is gradually emerging from the off-season, high supply remains an issue that requires attention in the future. After this round of price increases, export orders have weakened, and some steel mills have switched to selling billets instead of further processing molten iron into finished steel. This also indicates the increasing pressure on order intake. Although the overall supply-demand contradiction in the fundamentals is not significant, and the price of scrap steel remains relatively firm in the short term, the upside space for steel prices is limited unless production decreases, even if raw material prices stay firm. Looking ahead, we need to further monitor the sustainability of demand after the National Day holiday and the recovery of demand in South China. Otherwise, steel prices may decline further. For procurement, it is recommended to focus on purchasing based on rigid demand. Institutional players hold the view that macro-level sentiment factors, such as the push against involution and production cuts, have been causing greater disruptions. Fundamentally, demand for construction steel has seen some improvement. However, the pre-holiday inventory replenishment cycle has come to an end, leaving prices with only limited support. Regarding risk factors, caution is still needed as it will take time for policy implementation to translate into actual demand, along with the potential impact of ongoing policy-related disruptions. To summarize, The steel price has found support at the bottom recently. In terms of product categories, the seasonal demand for construction steel has recovered to some extent, and procurement should mainly be based on rigid demand. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.